trade from today. We'll take a look at that. We'll go to the hourly first. Clear out the annotations. All right, so look at the higher time frame. Swing high formed up here during Monday. Trades back lower. We have a continuation on Tuesday, creating the potential low of the week, which I do think that Friday is expected to pop through Monday's high. Trades back down. So on the hourly, we already have a bullish bias. Expected to take out this high. I was targeting for the sibi earlier this morning after we ran out the 830 sell side. So if you go to a 15-minute chart, start marking our stuff up. Here is 830, 930, and 11. Already displaced. Taking on stops during London session. So this year's seeing London protraction, expansion throughout New York. Go to the 5-minute chart and we'll look at the first couple 5-minute candles here. So news didn't bring a whole lot. I had the sell side down here marked out, as well as the 5-minute gap. Now, as 930 comes in, we're going to look at the first, 3 to 4 different candles, maybe 5 different candles that print. 930 comes up, prints above. I'm watching this bullish order block, trades back down. But at the same time as it's trading back down and running these stops, it is holding this bullish fair value gap as well as this bullish order block. So that to me is a indication that we want to continue the rest of the morning session, obviously with time being a factor, so high being put in between 10:30 and 11 o'clock. And we drop down to the 1-minute chart. We wait for that purge on the other side. And your standard 2022 model runs the lows during the profile time, expands up. We see it for value upfill into the box. Oops. And then expands up, taking out the 930 high as well as a group of pool of liquidity here. Now 930 also did run run buy side. It is good to mark that up because it was a shallow run. If you mark out right over here, we have a buy side pool, as well as over here. And if you look at it, we look at the run. It's a very shallow run. Maybe purges it by 1 or 2 candles, and then 930 also purges it again. But all of the candle bodies, after we run up here, these candle bodies are also staying below a 15-minute pool. We have this one over here from London. And we have this pool over here as well, even Asian high. Anyways, drops on the fair value gap, going long into the range. And that was the execution from today. The video is posted. I didn't unlist it. I'll unlist it later today. I'll send it into the wins and losses chat really quickly. So you can watch the full breakdown live. Right, there we go. Then if you look at the profile from today, I'll pull that up quickly. This is an exact profile that's from the ATM model video. There's about 7 of them. If you want this PDF, I'll send it in here too. We pull this up really quickly. So these profiles are extremely helpful when you start looking at just the morning session using that 5-minute candle. If we see specific things at specific times, like if we have a run on liquidity down 930, if we have purges at 8:30 and purges the other side at 9:30. So if we look at something like this, go to this setup right here, 8:30 purges buy side, 9:30 purges the other side, meaning sell side, and it trades up into 10 o'clock and then either reverses or retraces as we go into 10:30. Now, if you look at this profile too, we kind of merge both of these. Runs for the 8:30 low, and then it creates a low at 10 o'clock. If you look at the picture from today, runs it, the 8:30 sell side, from a 9:30 swing, and then trades back up going into 10:30, 11. Anyways, I think it's important to start. If you haven't already, just take screenshots of your morning sessions and break them down by time frame. 1 hour, 15, 5, and 1 work best for me. And I think it's extremely useful because then you can actually go back and label things as you see them. There's different profiles each day. There's different setups that happen at specific times. Like you can start looking at, okay, what's commonly happening during the macro times? Are we seeing entry patterns? And I think this is how probably ICT did it. Figured all these patterns just by taking screenshots and looking at the charts all day. I'm not going to share this specific one. There is a link to this kind of AM model notion, but it doesn't have this kind of layout with calendar. So if you want that, shoot me a DM. I'll try and find the link after the stream. We'll go back to the chart really quickly. We'll answer those questions. How can we correlate distributions, fractals of the quarterly theory? I'm not super well versed in quarterly theory, and I personally don't use it. So I would assume, though, you have to split it up into 30-minute windows, or I don't really even know quarterly theory like that. So I don't know if I can answer that question, to be honest. But it's probably have something to do with macro times, I assume. Look at your end of your 30-minute windows, end of your whole hour windows, or even your 15-minute pools, and there's going to be distribution. If we look at every single 15-minute range, there's going to be most times a specific market maker model that's printing in between here. Okay, we have a sell model, here we have a buy model, tiny sell model, buy, another buy, sell. So anyways, you can drop into lower time frames and look at that stuff too. I'm sure that applies to quarterly theory. SMT at the weekly highs between ES. Oh yeah. That'll be interesting. I don't know. I feel like with the weekly profile, it should still expand with NFP, but that's a highly manipulated news driver, so we don't know. On to side on 3. How about you, my man? Quick question. You said you were looking for shorts earlier. When did you not go short and start changing your bias? Sorry for this has been asked already. No, you're good. Has been asked. So yeah, in that video I was annotating. All right, we ran out. Buy side up here. We also have that. If I can turn this on. Oh, I don't know the indicator one. Anyways, buy side up here. Trades back lower. We have a market structure shift. If you look at the 5-minute too, I think that's the clearer version. So I'm watching this. Okay, I like to watch the first 15 minutes, that first 15-minute candle to print, because sometimes we'll have Judah swings, maybe 2 Judah swings in there. So we ran out the buy side at 9:30. And now I'm watching, okay, is there a reason where we're breaking down? So we traded up, smashed through at 9:40, and we closed below this down closing candle. Now I'm watching that as a potential CISD. I'm also watching this one, because this is the one that actually started the move. You can see there's a high, low, higher high. That's your breaker. So if we want to see a true change in state, it's going to be below the breaker low. So this to me is, yeah, that's the first sign, but if we can break below, this is the most important. So if we trade back down, and now I'm looking at the 945 candle, we purge this sell side pool, and we're filling this gap. On the left side of my chart, or on the left screen, I normally have 4 time frame pulled up. I have the 1 minute, 5 minute, 15 minute, and the hourly. So I'm looking at all these time frames at the same time, kind of identifying what's going on. So as you trade it back down, I'm looking at this as, okay, there's a reason we can still go short. We have more sell side here. We have this 15-minute gap. We have inefficiencies down here too. And if you drop to the 1 minute, I annotated the video this gap in here as I was looking to go short on. This one and this one above. Okay. Now the reason I didn't pull the trigger, so I said something like short op. The reason I didn't pull the trigger is I'm watching this range. Okay, I'm watching this. So see how there's a high, low, and higher high. There's also a high or a high, low, higher high. So I'm watching these as potential breakers. If we're truly having a change in state of delivery, then the breakers should hold in theory, right? So as we treat it up into this gap, I'm looking at, okay, we have tons of order blocks over here. We have this inefficiency, which is the only one that wasn't efficiently filled. Now, what does that mean? Well, we need to have selling and buying through it, right? So in this gap here, selling, buying. This gap now works through it with some buying and selling, dips down, works through it again, wakes up again. So this is pretty efficiently delivered. This gap only has a clear selling candle through it. So as we trade up, that's a whole lot of, a whole lot of information, I'm sure, but hopefully it makes sense. We have a high, low, higher high, and we're trading to the breaker. And this is kind of the line in the sand for me, where I was watching to see if we're going to get respect off that. Pop into it once, trade back down. Pop into it again, and then it closes above there. So to me, I'm like, if we see this next candle displays through, that's fine, but I really don't like the fact that we're breaking above through PD raise. Now we've closed above this sibi, closed above the inversion gap, and we've closed above this one, the bearish order block as well. So that's the reason I didn't go short off that. I'm not using a limit order. And then as soon as we popped up here, I'm like, okay, this is probably just a sweep of the highs. If you go back to sweep of the lows. If you go to the 5-minute chart, I think it's a little bit clearer. Now you see, okay, this candle prints like this, and it pops up. You can wait for the next 5 minutes, and it goes, okay, we're filling this gap, we're holding it, we're holding this bullish order block. Now I'm thinking, since we have the hourly pull up here, this imbalance, that's going to be our drawn liquidity. So then we trade back down, fills the 5-minute gap as well. You can use this as your entry point. Hourly drawn liquidity and 5-minute entry points is really all you need. And then 15-minute and 1 minute too. But trades into that, pops up. Eventually we get the hourly sibi. So that's the reason I didn't go short. I know there's kind of a long explanation, but it's just kind of flipping. You can't marry your bias, is what I think ICT has said before. So you can't stick with it too much, where if the signs are showing where we're starting to reverse, we're breaking bearish PD arrays, you got to be flexible with the bias and be able to flip on a dime, where then you can look at what makes sense now for the upside, right? For bearish, where the premium PD arrays we have to attack. As soon as you flip bias, though, one thing I'll say is, if there's a reason on the 1 minute time frame or the 5-minute time frame that we're reversing, and say you're short here, you need to go back and restart your analysis. You have to go back to the 1 hour, go back to the 15-minute, and go, okay, we saw the first sign on lower time frame. Is there a reason now we can switch bias on higher time frame? Because if your bias is still, we're going down, and we see something like that, you're gonna go, okay, this is just, we're just retracing deeply, or there's another short-term high we have to swing above before we dip lower. So as soon as you flip bias, you need to understand that you can't just flip it based on the 1 minute chart or lower time frames. You got to go back to the hourly, go back to the 15-minute, and restart the whole kind of pre-market analysis that you have. As soon as you come to the charts in the morning or in the PMs or whatever it may be, you have, okay, for me, it's I pull up the hourly chart, pull up the 4 hour, and I'm looking at, okay, where's our draw liquidity? Then drop down 15, then drop down to a 5, then I drop down to a 1. So if you do that in the morning, you should do it at the same exact time that you're able to flip bias. If you go, okay, I think it's going the other way, run back that same exact pre-market analysis, and it'll make a whole lot more sense. Because then if you're just flipping bias and the 15 minutes going the other way, it's not going to be as helpful. You don't use the weekly, daily for your analysis at all. I'll use it when we're something like this, all-time highs. But in the morning, really, no, not really. I'll look at maybe the 4 hours, my highest one. It's true that you do need the daily pull, right? You need to, where the daily candle is likely to pull towards. But when you have something like the 4 hour, like, yeah, the daily works, at least, just for looking at highs and lows and gaps, things like that. But when you're in a range where there's 2 fair value gaps, or there's 2 pools like this, if you look at just this candle that opens, okay, we have a gap up here and we have sell side down here. You don't really know what the daily, although it's useful, Drop on the 4 hour, it's, I think, a little bit clearer. Okay, we're holding the bullish PD array. We haven't dipped below this bullish order block either. And the hourly, you can just drop even further. So if you're trading intraday, I don't know how much you truly need the weekly and daily, but if it works, then. If we take out buy side and sell side before macro time and we trade back into the range, what are you looking for? That's a good question. I'm then going to the 5 minute and trying to reason with what's most likely to go to, or I'm going to DXY. If on DXY, we're making a higher high or higher low and there's a real draw, I'm going to anticipate that being the true direction, inversely correlated with indices. So if NQ and YM are stuck in the range and ES is trading above and DXY is trading down, I go, okay, there's a likelihood now that during the macro time, we're going to be use it to expand and catch up with the other index, and it's going to go potentially up. And then obviously you're going to frame that on a 5 minute too. But I'm kind of zooming out and looking then across all 4 of these charts: YM, ES, NQ, DXY. Flux, sorry if this question isn't relevant, but which ICT mentorship do you think impacted you more, 2022, 23, or core content? That's a good question. I would say, I think 2023 had the biggest impact on me. 2022 gave me a full model to work on, so I think that was the foundation. And then 2023 with the macro times and like actually exposing the different thing that repeats, I think had a greater impact on just looking at the market as a whole. And the core content, any specific question you have is all found in there. So I don't think the core content really had the biggest impact. It was more of like the resource you went to whenever you had a question, you could find it in there. 50-50 on this SMT holds. Yeah, I don't really know yet. We gotta wait till after 8:30. It'll be good. Yeah, no problem. I would say if you were to start though, 2022 is the way to start. 2022, then maybe core content, and then 23. How long I've been trading for about 2.5 years, maybe. Yeah, about 2.5 years. ICT, started ICT for about 16, 18 months now. 1.5 years. But if you have the ability, I'll go back to the time frames, but if you have the ability to pull up another time frame, I would say it's extremely helpful. Or if you want to use the larger candle, I see a lot of people doing that too with their larger hourly and daily candle expansion on the right side. That's, I think, helpful. I actually might start using that. But don't just have one time frame unless you have a great understanding that you have to flip between them. If you watch anyone who has just one time frame pulled up on their chart like this, I guarantee they're going to be flipping back and forth. But if you have just one that's printed here, make sure you have some other examples on the left and right. Back up to new week. Oh, yeah, we are. ES is above new week opening gap as well. I feel like we could just revert back down. It's hard to say. Who knows? What do you mean by when you say old selling or old buying? How do you apply it to them? So it's basically, we're looking at a market maker model. Each bullish order block range that is held in this area is an area of accumulation, right? So then as we trade back below, it's basically inversion order blocks. The simplest terms, old buying, old selling, is just inversion order blocks. So if we have a bullish order block here and it holds, then as we trade back below, we want to see that same level that was held again used as resistance. Same thing over here. used as resistance. Same thing with the buy model. So in this case, bullish order block, trades up, trades back down, trades back up. And you can see this old area of an order block. Then instead of being used as a bearish order block, it's then used as a reclaimed bullish order block. So it's just pulling order blocks just the same way you pull fair value gaps from the left side over to the right side. You can do this like almost everywhere. Most PD arrays, you can flip. So even breakers, even something like a breaker, like this is a breaker where it doesn't trade into it, you can flip that and pull that over there. How do you know if you're ready to start funded? I feel as if I am because I've been profitable, but I feel that there's so much more to learn. Also, which funded do you recommend? I think in order to go into looking at funded and prop firms, things like that, you have to be extremely comfortable on a demo where pulling a demo trade out, you have no emotion. That should be the first step. So if you have no emotion as you pull a demo trade out, if you are watching the demo trade and you're putting on a bunch of stuff, it's going to be a little bit wonky. I would say though, have the point in trading where you should be able to go to fund is if you have a model that you know repeats and you can see it almost every day. As soon as you start going to the market with ICT concepts and you don't have a strict model, you're going to start buying and selling every single fair value gap, every single PD array you see, every single model, silver bullet, macros, 930, 830, all that stuff. So have a model that you are sticking to in backtesting for at least a month, maybe even 6 months. I don't know, however long you need, but then you go into funded, I think, because then you're comfortable. Okay, I know my model. I've seen it enough times, and I'm basically it's just going from demo to another demo, right? So it still says demo on it. But if you are uncomfortable with the emotions, or if you're uncomfortable with, I don't know where my model is going to be, I don't know if I'm going to get a trade today, so I'm going to put on more leverage than I need to, then you start getting into an area where it's a little bit harder. C1 News does need to see a CIC or something to confirm SMR to the downside. Yeah, we'd have to trade probably all the way down past that bearish order block, or even below. See that last bullish order block and in that blue box? I would say we have to displace all the way through that. Kind of like the week with a CPI where we hit buy side and sell side in the first 2 days and trading the center. Yeah, I actually think this week is one of the best we've seen in a while. We got basically every single profile and it's starting to become better price action. If you remember from November and December, that stuff was a mess. And now we're getting like 20, 22 miles every single day. Yeah, Patreon's open. We do this stuff every day. Any problems with FX replay? Not really. Sometimes the server gets disconnected every like 2 hours, but I think it's a great platform, easy to use. One thing I don't like though is just the time frames sometimes are messed up. Like you can't. I don't like redoing my high time frame analysis every single time but I mean that's just what you have to do in backtesting. And sometimes when you flip time frames, it gets a little messed up. It doesn't stay in the same spot. But other than that, no, FX replay is great. It's like an advanced version of TradingView replay mode. That happens like very occasionally for me. Like it'll happen maybe once every 1 to 2 hours, maybe less. I don't know. I feel like that is a common problem. How do you identify the correct order blocks? That's a good question. So I'm looking at basically it's kind of stupid, but the ones that pop out to you. So if it's like a range where, these tiny down closing candles, I'm not as concerned with it. Although, yeah, we do use it over here. I'm looking at what's the most obvious connected candle range or in the obvious largest candle. So in this case, okay, we have this down closing candle. I'm not going to use this one. You could use this entire range, but I'm looking at this is pretty obvious, right? Taps into it. This is pretty obvious to me. You just start with the most obvious ones. Taps it there. They start, okay, we just displace through here. Typically, your highest probability order blocks are going to be next to fair value gaps. If they're forming in tandem with a fair value gap or they're right next to one, that's going to be your best order block. Or if a fair value gap is placed on top of it, those are the ones you're going to be most entertained with. The ones you're going to be picking. It's like here we have a fair value gap order block. Holds that. Right? Here's an order block with a fair value gap. And you can use it. Okay, breaks above. Now we're looking at potential reversal. So once you understand order blocks, you can basically use those instead of market structure shifts. So if we're displacing, here's a fair value gap with an order block. And I'll see how it's closing above. Taps into it. That's how you identify change in states of delivery. Fair value gap with an order block holds that. Now it closes through here. Comes back down. So focus on that first with gaps and order blocks, and then look at what are the most obvious ones, and then look at inversion order blocks, all that stuff. But work at the easiest part. Don't even worry about breakers. Don't worry about mitigation blocks. Don't worry about trying to pull it from the left side of the chart. I would say first look at gaps, because the order you should study is buy side and sell side. So look on drawn liquidity, what's most likely going to run for. Then focus on fair value gaps. Then focus on time. So if building a model around time, then look at order blocks. Order blocks should be not the last step, because you do need it to use, like you need it to use price at specific times and find drawn liquidity. But don't spend a lot of time in the beginning studying order blocks. I don't think that may be a hot take, or people don't agree with it. But then once you understand order blocks, then you can go to a higher time frame, look at your 15-minute, and start reading in tandem with gaps and liquidity pools. Are we holding bullish or bearish order blocks? And that's your order flow. Are the PM macros the same as the AM? They're slightly different. They are going to be at every top of the hour. I don't know about I assume every top of the hour. So 12, 1, 2. The one I'd be careful about these two as they're within lunch. But 2 p.m., 3 p.m., and then the one that's different is your 3:15 to 3:45. You have an entry between here, and then price will spool between 3:45 and 4, sometimes into 4:15. Settlement close basically towards a untapped drawn liquidity. This is a larger one, so most times it won't spool in here. It'll find an entry point between this range, and then it'll run. So if you look at old stuff, you get entry points and then runs, and sometimes it doesn't do anything. This is kind of a 50-50 one. It's based on the economic calendar. I think the days of good PA is coming. I know this stuff is fine. It's becoming easier. I think all those difficult days make so much easier to just look at these kind of stuff. What do you look for in the PM? I'm not actually looking at the PM. I don't study it a whole lot. If you notice, a lot of the data, all the macros and AM session profile videos that I do are all based on the AM session. I actually don't look at. Once the clock hits 11:10, 11 o'clock, I'm not looking at it anymore. But if you were to look at the PM session, focus between 2 p.m. and 4 p.m. 2 p.m. is going to be kind of like your 10 o'clock of the morning session. But sometimes we don't get true Judah swings at 1:30. It kind of just lethargically moves post lunch. So look between 2 o'clock, 4 o'clock. You get about 2 macros in there, plus the end of day macro. Two p.m. 4-hour power of 3 occurs like every day. That's what I look for. That's probably a good idea. Simple power of 3. Yeah, I see those PM screenshots occasionally. It's good stuff. Although London sessions haven't been the best so far. Look at these. There's a lot of expansion throughout all of them. A lot of consolidation. Maybe one in here, but that's about it. Expanding a lot of these days. I want to see that good New York reversal right off London low. Trying to look back. Oh, one thing I forgot about the ATM model is if you look at the first gap that's formed and mark that out as well on the 5-minute or on the 1-minute chart, that's going to be extremely helpful. A lot of times, if you look at old backtesting data, look at that first 5-minute gap that's formed. Will they use it as a inversion gap, or on the 1-minute too? Inversion entry or a standard entry here and then here as well. I think that if you're in Patreon group, there's a whole different Q&A post on that. There's a bunch of screenshots. Oh, actually, no, it's just one. Oh no. It's called Opening Range First Gap. I'll put in the trading hall chat really quick. What macro to use for London? I would assume 250 to 310, or potentially 350 to 410. I know there's one in the middle of that. I just don't know when it is. What are some time-based advices you can give aside from macros? I think the most important one is there is session-based liquidity. So marking out your Asian high and low, London high and low, all that stuff. You can actually just plot it with a indicator. This is extremely important. So there's timed highs and lows, and there's specific times that we look at the closest highs and lows for us to run price out. So in this case, if we have sessions, any session high or low is going to be targeted and sometimes reversed off of. One thing I will say is this is going to be a lot of times on higher time frames. So if you look in the 1-minute chart, it's going to be difficult to see. Then the second thing is there is time-based liquidity sweeps. So if you look at 9:30, 8:30, and 10 o'clock, we can form models just around those times as they sweep liquidity on the 15-minute chart and as it closes below or above. So if we have a sell side pool like this, sell side pool, and price then comes down and sweeps it, but then the candle body closes somewhere up here, and then we expand up just a wick, that's a good indication for reversal. So if you look at the 5-minute, that's what I'm looking for in the morning. See how there's a pool here? Pool of liquidity down here. And we sweep it. Sweeps it and then closes above the sell side line. Indication of reversal. So yeah, this one now closes, sweeps above, but then closes near the top. That's an estimation that or an example where we can target this high again. That's why if you looked at, I'll send you a screenshot really quickly from this morning. Where since I said this morning, the 937 high, since it was put outside of time and it was a shallow sweep, we're going to be looking at that for the rest of the day. So time-based liquidity pools, if they form like this, and we're looking at a reversal signature of it closing above or below, then you can use that to be targets the rest of the day. Here, 50K Apex funded account, what do you think is the proper way to manage risk? Position sizes also, do you recommend just micros? I would say if you can split it into days where you have to lose in a row, that's the easiest way. So if you have a 2K drawdown for the 50K account, I don't know how much it is, but if you have 2K, I'm thinking, okay, there's a low chance that I'm going to lose 7 days in a row if I'm following my rules. So I'll split the drawdown into 7, and then that's the max loss per day. Or yeah, you could do 10% of drawdown. So you split into 10 days. So you want to divide it up into whatever number you want, and that's your max loss per day. You don't really want to hit your max loss per day. But if your max loss per day is 250, then you split up, okay, if my stop loss is 20 points away, I can't use a single mini, I'm going to use 4 or 5 micros. And then you go from there. Yeah, PM session is solid to trade, especially when you know what you're looking at the rest of the morning session and the PM. That's like a cheat code. You stream every day for the Patreon. Most days like today where it's pre-NFP, I didn't stream because it's expected to be low probability. Some Mondays don't stream, but all the high probability days for the most part are streamed. If we're going to buy a program on the higher time frame, most times we see reaccumulation in the PM session, which is also a 2 PM power of 3 move. I'm tempted to go to the PM session again. I feel like if you know everything that's going on in the AM, do you recommend Apex or Top Step? I like Top Step's payout method better. But I think Apex is, their plan. I would say Top Step, to be honest. Just because Apex, you have a trailing intraday drawdown, which you, to be honest, shouldn't reach anyways, but that is kind of annoying. And their payout system is kind of weird. You only have 2 or 3, I think 2 different sections in the month that you can get a payout, and you have to trade 10 days to reach that. It enforces good habits, but I also think that once you're good at it, it's a little restricting when there's something like myfunded futures that you can get a payout within like 2 days. Maybe not 2 days, but pretty quick. What do you think are the most high probability most high probability days, red folder news days, and why? Specific 8:30 news days are pretty high probability. So anything, besides NFP or CPI, even CPI, as long as you're trading after CPI, after NFP, it should be pretty high probability because a lot of volatility in the market and price likes to go and attack specific pools of liquidity and do it cleanly. I would say days before 8:30 news, there's a lot of them, but are going to be lower in probability. It's going to be difficult to trade. I would say wait for 10:30 to maybe 11:30 to look on those days because a lot of times the morning range is a little choppy, maybe forming 2 juju swings, one at 9:30, one at 10, even one at 10:30. So between 10:30 and 11:30, I'm looking at those days prior to an 8:30 news. Strict 10 a.m. news days sometimes are difficult. It's like a 50-50. It's either a super clean 950 macro trade using the 5-minute or the 1-minute, or it's just the most difficult trade you'll ever see using that macro, and you got to wait another 30 minutes for the volatility to cool down and finally find something. So just 8:30 news days or a regular day that doesn't have 8:30 news the next day, that's not a Monday. It's a lot. But if it's like a Tuesday and on Wednesday we don't have any 8:30 news, that Tuesday is going to be good. And then based on those days and based on whatever news is showing up, you can predict what's your highest probability time window. So if we have no news and there's no 8:30 news the next day, then we're looking between 9:30 and 11. If there is news, we're looking between 8:30 and 10, and then potential reversal at 10 o'clock into 11. If there is a 10 a.m. news day, we're looking at 950 macro or after 10:30 for a reversal move or continuation. And then think about if we have 9:30, we're looking at 9:30 to 10 to create the lower high, and then 10:30 to 11 to create the opposite side. Same thing with 8:30 news, you just shift it back. So if there's 8:30 news, we want to see 8:30 to 9 create the high or the low. 930 to 10 creates a high, and then we can reverse off that too. Probably we start this market maker sell on the daily. So tight of all-time highs. No. We'll start selling off soon, I think. Just because we have wait, that actually could be the quarterly shift. Maybe I'm tweaking. But if we form substantial SMT here, and we have to form that seasonal low between, was it April and May? Then this could be the sell-off that starts that move at the bottom. But I don't know if we can trust that SMT or if we actually have to go into it. Who knows? If we start selling off though, that would be a nice. Then you can start looking at 40, 60, 20 if the data look back. Exactly. Would you consider this week's profile as high probability classic expansion considering sell side liquidity was taken? That's what I'm assuming. We got this purge down here. Although this not being taken is kind of weird to me. I don't know if that was previous week low or what. Yeah, it was previous week low. So that's kind of weird to me. It's possible, but like Rob said, it's really up to the news to send us whatever. Yeah, we'll start selling off quickly there. Yep, exactly. If we start that Q shift though, we're gonna be selling off for a week or two. Maybe 3. There's a trailing drawdown of 3%, and I'm up in profit of say 5%. I lose 1 today, and 2% tomorrow. Is that hit the drawdown? Yeah. Yeah, it trails with you. So it's annoying because it's not, then you would think, oh, yeah, I have 8%, but it's actually, you still have 3%. It'll follow you. But I don't think there's any besides any specific static drawdown ones. So Apex has one. I think Elite Trader Funding has one. But if it's not static, it's going to keep following you on almost any prop firm, which is kind of annoying. But it also encourages good risk management. Like whatever drawdown you get in the beginning is going to be what you're using throughout the course of that account. So that's why it's wise to have multiple accounts and multiple prop firm funding max allocations if you can get it. I think buys would be so easy if they waited for daily PD rate and then a 1 hour market maker out of the form. That's true, and then use the 5-minute or 15 minutes enter. 5 minutes enter. I start using that as far as the for the week. That's like AM trades profile, I think, right? The way he trades that with that high time frame, 260 point catch. Yeah, whenever every hour is 5 minute. Same thing with 15 and 1 too, right? That's the fractalness. I think that's the true fractalness is when we have a PD array that's hit, there's always going to be an MMXM on a specific time frame. Using filter candles, like true reversals, things like that. Thoughts on Apex trailing drawdown? I don't like it. I think it should be end of day, but like I said, it forces you to not be stupid and trade super aggressively. Yeah, same. I don't even look at the 1 minute, 5 minute really that often. 5 minute is kind of what I've started staring at in the beginning and then dropping to 1. But I agree. Daily profiles are super helpful too. How did you get used to spotting MMXMs? It's still kind of hard for my eye to see them. Look at times. So I don't know what it is for Forex, but on futures, I'm looking at 9:30 to start an MMXM, 8:30 to start one, or at 10 a.m. to start one. Then once you know that, okay, we're running liquidity on a 15-minute chart at 9:30, then you know, okay, we just hit a 15-minute PD array. We know that if there's a time-based kind of, there's linkage between the time frames. So when we have a 15-minute PD array hit, just like we said before, then we can look at a 1 minute MMXM. If there's an hourly PD array hit, we're looking at a 5 minute MMXM. So we look at MMXMs at specific times based on 2 to 3 time frames. So I don't know, for Forex, maybe 7 o'clock, 8 o'clock, 9 o'clock, things like that. But top of the hour or 30 minutes, we're looking at liquidity sweep, trades back down, PD array hit, whatever, and then drop to lower time frame. Like you do the same thing with a 5 minute chart and a 30-second chart or a 15-second chart. You just drop it down. It's completely fractal. So it's a trailing drawdown of 3%. I can't lose 3% total at all, even if I'm up. Yeah. It's dependent though on, like, I know for Apex, if you were to pass that 3% and you make more than the trailing drawdown stops to follow, like it'll stop following you. So if you make a certain amount, like 2 times or 3 times your drawdown, it actually doesn't go past that point anymore. But whilst you're in that like 6% range, I think it will follow you. Once I see meaningful higher time frame PD rate trading during kill zone, you wait for the lower time frame CSD. Exactly. That is gold right there. That should be hung up on a wall. Because that really is just the secret there. Every single model would be framed on that very line. Exactly. It's MMXMs, it's the highest programmed, it's the one that the algorithm will use most times when we're distributing banks positions. If you look at the Swiss PDF from the Bank of International Settlements, MMXMs are the highest by 65% or something. Exactly. It's always a buy or sell. It's always a market maker, sell model or buy model. And you can time them too based on those time frames. 1 hour, 5 minute, daily, hourly. You just drop down. Gonna post this on YouTube? Yeah, it'll be posted. Where's the backtesting ones are? I'll post it probably unlisted though, so you'll find the link in the YouTube vids. I got you, Rob. Shoot me a DM. I'll send it to you. I've got like 2 or 3 PDFs just from the bank. It's like an 80-page document, but it's low-key stupid because it's right there. And you're really looking for an intermediate term high or low to be taken after the reversal or draw on liquidity to complete the MXM. Right. You're looking at, if you want true market structure shifts, it's going to be a CISD, meaning we're trading through an order block that we should have held, or it's going to be an intermediate term high or low that is taken out. Yeah. MMXM traders videos are probably the best analysis videos I've ever seen. And the OTE Trader. Those guys have the best explanations, I think. He might. I think he does. I think it's a one-time fee. I don't know if it's a mentorship or it's a PDF. You can find it on Twitter. If you look up his Twitter account, he definitely has one up on there. Let me see if I can pull it up for you. The video really quickly. Currency Merchant is also crazy. AM Trades too. He's got good analysis. Let me look up this guy. This one right here. This video is crazy good. There's so many gems in that one video, and it's not a clickbait title, but it's probably something you wouldn't click on 100% of the time because you've seen a lot, but this one's really good. Yeah, no problem. He's got good stuff. I'm gonna write something down really quick. Grouped accounts in Trade of 8, but the grouped accounts doesn't show up in view for Apex. I'm not sure. Normally it should be in a group. It should be, you have to click on the little drop down at the top, and it should be a specific group. You have to select. It won't automatically put you in the group. You have to kind of select it a second time. You put it in the group, and then you have to, when you load up the chart, it'll be a second selection below whatever your account number is. So it'll have like Sonnet, whatever, and the other one below that, Express, whatever, and then it'll be a group 1 that'll have a bunch. You say someone's too young to start trading funded live? No, I don't think so. I think if you know what you're doing, there's no age. But I think you should feel comfortable with what you're doing first. So you may be too young in your trading journey, but age-wise, no. How do you feel about so many platforms stopping their work from using meta quotes? I think it's something to do definitely with, if you remember, ICT said maybe in 2022 or 2022, 2023. I think it was 2022. I don't know. Anyways, one of those two where he said Forex was going to leave soon, which is the reason I don't really look at Forex a whole lot. So I think it's just coming to fruition where now, as central bank currencies and things roll in, cryptocurrency becomes more popular, things like that. Foreign exchange is going to not disappear, but be different from what it is now. So I think that's just what's happening right now. So turning 16, recently turned 18, best funded. No, that's mad respectable. I love it. That's what I wish I did that. All this stuff back then. How do you deal with emotions? I mean, to be honest, it's difficult. It's something that you'll battle with every day. I think it takes a lot of practice, to be honest, and a lot of losing, where then you're almost comfortable, or there's a point where you can't do it anymore because it's just too painful to do the same mistake over and over and over again. Sometimes that's what it takes. Other people just are really good at it from the start. But journaling, so when you take a loss and when you do something stupid, writing it down is extremely, extremely helpful. Like more helpful than you think is possible. But if you're just taking a loss, you're not writing it down, you're not going to learn from it. You got to write that down. This way you could trade it into the unmitigated portion of the bisi. We got smart in the hourly. Yeah, that's beautiful. And then you can drop down the 5 minute, you know, because there's MMXM. Find 5 minute entry within a kill zone. Can you explain CISD on the chart so I can see it? Yeah. So, it's one from yesterday. Bullish order block on the 5 minute. 9:30 comes in, holds that bullish order block, and you can see with the candle closure, holds the bullish order block, holds the bullish order block, holds it again. Now we close all the way through the discount end. So this right here is what I'm watching for as a change in state of delivery. And if you can also see that this CISD is lined up with an intermediate term low. So this here is your true market structure shift. You don't need another one after that. That's all you need. We know that that high, now that's formed, is extremely unlikely to be taken. So this retracement here, although yeah, it's scary, we're just filling in for value gap. And then now we've traded into that. We're holding the bearish order block here. And that's your second version of CISD, where it starts holding the bearish order blocks instead. How many backtesting hours do you spend on average? Too much. Recently, it's been probably 3 hours plus, but per day. But that's a little skewed. 3 to 4 hours, maybe more. But I would say average, if you really wanted to just get good at it, maybe an hour a day is all you need, just by looking at old data too. Yeah, no problem. Continue the hunt in the AM. Trades the 15-minute bisi. This is what I see on the 1 minute chart. Yeah, that's beautiful. The day today, 3/7. Yeah, that is the only model. You just look at that every day, right? I mean, if we don't trade into a higher time for PD rate, you don't care. But every single time we're doing that, it's clear. You just can do work in continuation in New York. That's really what the ATM model's framed on. How long of a duration will you backtest? A month, weeks, forth. I mean, I'll put it back a couple of years and then just backtest it till I got something else to do. But if you want a good representation of something to backtest, 30 days is probably the good analysis, because you get probably every single news driver, every single high impact news driver, NFP, maybe even 2 months of a duration if you want to backtest a specific thing. 1 to 2 months is probably the good for a good range. Anything past that is just, you know, you're really trying to study something. Does the MMXM have to have a consolidation at the start? I'm sure it doesn't always look 100%. No, I would say most commonly, okay, well, realistically, yes, it's just going to be on a lower time frame. So it may just be a reversal, and that's all you see. But most times that's going to be an internal range reversal, or it's just going to be on a lower time frame, like way, way lower. It'll be consolidation for a short amount of time. So technically, yes, but on the time frame you're looking at, like the 1 minute, and you don't see that consolidation and reversing, you don't need that to happen. I would say it's almost 50-50. But at external ranges, you're going to consolidate. Meaning if we don't see a consolidation, when we reverse, then it's most likely an internal range liquidity sweep on a higher time frame. So see how now this, we have consolidation. That's going to be your external range. So we're going to go back to, so remember how price goes from, this is a whole different topic, but it goes from internal range to external range and IRL to ERL. Well, the way you can look at that is, where's the consolidation? Are we reversing with the consolidation in mind? So then if that's consolidation, we consolidate at the external range. We know that. Okay, next is internal range pool. We do a sweep like this. This sweep right here sweeps it, sure. Do we see consolidation up here? No. It's going for internal range to external range. External range is down here. What do you see as a result of the external range forming? Consolidation. Trades up, takes out here, keeps going, keeps going. What do you see right here? Why is there no consolidation at this bottom? Because it's internal range liquidity. Internal range now, where do we go to? External range. Up here. Now we see consolidation. Then we see a Judas swing, trades back lower. Trades back lower again. We have a reversal internal range here. Trades back up, consolidation. That's external range, we're going back down. So obviously it's cherry picked a little bit, but something you can look for. What's the chart background color code? I think it's C3. Yeah, C3, C3, C3. It's in chat. What'd you call internal range when we swept the low? I always look at internal range as a fair value gap. We did sweep this low, but if you zoom out, now it's clearly internal range. This is your external range with consolidation down here. Then we're sweeping it, and then look over here. In here, internal range. It's obviously going to be dependent on whatever time frame you're looking at. So an internal range is going to be an external range that has a higher time frame, or flip side. It's just like the stages of delivery. We're always going to be on a different stage of delivery on a different time frame, but I don't think it's something to focus on too much. Here's your blue. It's just going to be this one. Gray is going to be this one. So it's going to be your first blue and your third to black. Yep. Okay. What's your daily routine? Like, is there a set amount of backtesting study you do each day? And how do you go about your studies? There's no really set amount of backtesting I do each day. It's just dependent on how much time I have. One thing I will do is I'll split it into two different kind of sections. And I think you should be doing at least one of the sections, if not both. Now, the first section is I'm looking at old data. And the way I collect old data is, if you were here before, let me pull up the Notion really quick. Is I have them separated into days, and it takes screenshots from multi-time frames. And this is where you can go into actual old data and see what the patterns are. So I have all these split up into days. And then if you click on a random one, it's going to go hourly, 15-minute, 5-minute, 1 minute, and then the profile. So looking at these and just looking, if you want to just look at all your pictures for 30 minutes, just got nothing else to do, you want to just look at this. You start looking at these pictures, you go, okay, what am I noticing is a pattern? What can I see that forms every day? What's very similar between different days? That's how I was able to come up with what am I looking for my own profiles, similar to ICTs 3. But then how can I, oops, is it actually? Oh, it should be fine. You have to just close out and rejoin it. And then you can actually see the different stuff. So there's a famous quote. I don't know what it is. It's like the magic you want is in the work you're not doing, something similar to that. So if you feel like, oh, I'm missing something, or if I feel like, oh, this guy understands something better than I do, or how come I can't? Maybe you have a question. Like, okay, where are reversals expected to happen? How can I see reversals? You just go into pictures from previous days and you look at, okay, what time are the reversals happening? What's a indication it's going to happen? See, we purge it at 9:30 and closes below. Okay, now here, sweeps the sell side, displaces up. through a intermediate term high. The magic you're looking for is in the work you're avoiding. Yeah, there you go. So this is the first part. The second part is just going on to FX Replay or going into replay mode on TradingView and doing actual live data reading. You can also go to old live streams, or if you want to record your screen yourself, you can go back and watch that and kind of just watch it over. And sometimes you'll see things that you haven't seen while you were watching it and doing it live. All right, it's approaching 7 o'clock here. Go ahead and wrap it up. I don't want to take too much more of your time tonight. If you got any questions or if you wanted any of that data, or if I told you to DM me, shoot me a DM after the stream. I'll get back to you. Stream recording will be posted unlisted. I'll send the link into YouTube vids as soon as it's done rendering. But hopefully you were able to find some insight from this stream. Or if you have any other questions, feel free to shoot me DM as always. If you're in the Patreon, I'll see you guys tomorrow morning, Lord willing, for a stream. But until we do another one of these, probably on Saturday. Keep a heads up on Saturday. We'll probably do another one. So I'll see you guys then. Stay safe. Enjoy the rest of your day or night. I'll see you guys soon. Peace.